Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Sonia Shenoy and Pavitra Pari. Good morning, girls. It's a down day for our markets. The Nifty sold off about 125 points as we speak, but still holding on to that 18,000 mark. The mid-cap index is yet to find a bottom. Pull up the intraday chart of the mid-cap index and you would see it's fallen close to about 300 points from the top of the trading session. We're at the lows for the mid-cap index. Today, the banks are not outperforming. They're falling in step with the frontliners. The mid-cap index down 350 points. The PSU banking index too. After a nearly 10% up move in the month of November, today the PSU banking index is down close to about 1.2%. So profit booking kicking in the PSU banking space. Pull up the intraday chart of the PSU, the Nifty PSU banking space. The global backdrop is subdued. Hang Seng, Taiwan, Nikkei, all of them down between 1 to 2% as we speak. The Chinese markets too are down about 0.5%. The fallout of the crypto markets, the impact that it has on tech equities is also weighing on the risk sentiment. And that's one of the reasons why the dollar index has seen an inch up to levels back above that 110 mark. Remember, we had dipped below that level in yesterday's trade. So consequently, all that is weighing on the markets. Good morning, girls.
Hi, good morning. I think there's so much happening, right? I mean, the rest of the day is going to be taken over by the match. India versus England starts at 1:30. So I don't know if
someone's watching our show right now, right? Imagine 1:30 p.m. onwards.
I don't think even we are going to be watching the markets 1:30 onwards. There's so much action there. Just hope it's not a washout because the Adelaide has a cloud cover is what I read last. So, but yes, for the market, I mean, it looks like a bit of a washout for the bulls. The only thing is that it's not as bad as perhaps what some global markets threw up, right? So this has been a buy on dips market. The dips have not been bought just yet. But at least after the initial selling pressure, it hasn't gotten any worse. Yeah. I think the bulls would like that.
Oh, absolutely. Like you said, I mean, we've held above that 18,000 mark. So for now, there are cuts coming through, but it's much less in contrast to what we saw in the US and in some of the Asian markets as well. In addition to the PSU banks that Reema mentioned, some of the auto stocks also under pressure today. So a few of those will come up. Tata Motors, of course, on earnings, and then the rest of them are also up on your screen. In terms of cues to track, we do have that big US CPI figure which will come through. That will be an important cue. Also take a look at Brent prices. We have seen a move lower to 92. So it's important to see how that moves. And of course, the crypto market action will be closely watched as well. But let's talk about some individual stocks which are in focus today and reacting to their earnings. Tata Motors, like I said, is one of them. Lupin is the other one that we are tracking. So let's actually talk about both of those. Sonia, take us through Tata Motors. It is the top loser on the Nifty. So everything that went wrong there.
So, I thought, let me just drill it down to the 5 reasons why Tata Motors is down 5%, right? If you just look at the core numbers, there are a lot of data points, but mainly you have a big loss that Tata Motors has posted. The expectation was that there could be a profit this time around, so that is a bit of a disappointment. Of course, compared to last year, the losses have narrowed, but that's also because of a low base, because there was a semiconductor shortage issue last year, so it's really not comparable. If you look at JLR itself, it reported a negative free cash flow of 15 million pounds, and the company said that that's because of the adverse working capital movement. JLR has also gone ahead and lowered its guidance for the full year for FY23. They say that the EBIT margins will now be positive. So that's a blanket statement. But earlier they had guided for a 5% EBIT margin in Q1. That's perhaps because of the global challenges. And that's something that's not gone down well with the street. Also, the debt has risen quite a bit, and that's a worry point for me. Almost 60,000 crores of debt on the books of Tata Motors now, compared to 48,700 crores at the end of FY22. And finally, the company has also cut its free cash flow guidance. So earlier, they had said that there would be a £1 billion free cash flow by the end of the year. And now they are saying they expect a free cash flow break even. So in that sense, they are cautious. They say that the global challenges exist. A lot of brokerages have gone ahead and cut their target price as well. And that's the reason the stock is under pressure today.
So I think there's the fact that the debt has gone up and even the free cash flow guidance has come down. Would it not get the investors to start questioning whether Tata Motors will be able to become net automotive debt-free? Remember, Chandra has been talking about that, the company will become debt-free by 2025 or FY24. But now, given the fact that there are issues in Europe, China itself is also under concern. And even in these numbers, in this quarter's numbers, free cash flow guidance brought down, net debt has gone up. I think people will start questioning that,
it's very interesting you point that out because IIFL put out a very interesting piece release this morning where they say it's been a lost decade for Tata Motors investors, right? If you look at it in the last 10 years, we can't pull up a 10-year chart, but I'll tell you the data. It's a negative 1% compounded growth for dollar investors. It's a 9% absolute decline, stock price, in the last 10 years. And it's a 5% compounded growth for INR investors. So the loss that Tata Motors reported way back in 2009 was also 3,000 crores. And this time as well, the losses continue. It's expected to report a 3,000 crore loss even in 2023. So from 2009, where they had a loss of 3,000 crores, once again 3,000 crore loss in 2023. Neither has the company gone anywhere in terms of profitability, and neither has the stock. So very interesting data point put out by IIFL.
Okay, but I think the street is betting on the EV picture and the fact that Tata Motors does have dominance in the EV market in India. But I guess that will take some time before it becomes a big contributor to their overall sales as well as valuations. But let's talk about Lupin. That's surging in trade. Lupin has been an underperformer, but this quarter there has been a significant 31% increase in the US sales, boosting the margins, and that's the reason why the stock is excited. Ekta is here to get us more details. Ekta.
Well, largely an inline set of numbers, you would say, for Lupin, but they came through when it came to their Q-on-Q recovery in terms of margins as well as the US business, and that's what the street likes. So the revenue was flat and the street was expecting a flat performance this time. The key highlight, like I mentioned, were the margins, which improved to close to 11-odd%. Street was anticipating around 10.7% in the previous quarter, and this is versus around 6% that they reported in the previous quarter. So rather 10.7% was the estimate, 6% was the was what they reported in Q1 of FY23. US sales came in better than expectations, so $159 million versus estimates of $155 million, and versus a low of $121 million that they hit last quarter. Profit, yes, it was below expectations, but the street is just squarely focused on the margins as well as the US business this time round. India was sluggish, so that was one of the pain points this quarter. So the India business was up only around 3-odd%, and it has been quite a volatile business in the past couple of quarters. Now, in terms of guidance and triggers, would be, for example, the margins probably improving from here on to levels of, say, maybe a 17 to 18% exit run rate for Q4, something that the management had spoken about earlier. Plus, as well as the US business probably picking up further pace, sustaining at these levels and maybe hitting that $200 million revenue mark on a quarterly basis. And overall, key launches such as Periva generic, as well as a pickup in the India business resolution of US FTA issues. If you look at the stock, it has already lost over 20% from its 52-week highs. It's trading at around 36 times 1 year forward, or 21 times when you talk about the FY24 estimated PE, and around 15 times when you talk about the FY25 estimated PE.
Okay, all right. Ekta, thank you very much for that. Let's